Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at Japan, both in terms of its equities and its currency. Starting off with the Nikkei itself, where we can see that we're still in the aftermath of a massive end of 2012, early 2013 rally. I'm interpreting the price action since May last year as one of consolidation. There was always going to be consolidation after such a big move. What we're seeing at the moment are narrow bear trap rebounds from below the 200-day moving average around the 14,400 mark. This is also taken as bullish, and we can also draw a rising trend channel from June last year running through the 14,400 area as well. So it looks as though we got a base here. If you're not so sure about this market, you'd wait on a weekly close perhaps above the blue 50-day moving average at 14,876, or the RSI itself now at 45 to break back above 50 as a leading indicator on a higher move. Clearly there has been a pause in the progress here. We're in the run-up to a rise in consumption tax. There's going to be one at the beginning of April, and then another one at the beginning of October. Rather strange part of the so-called three arrows policy of Superman Abe, the Prime Minister. Obviously, it's understandable in terms that in the terms that the government there in Japan is highly in debt and needs some tax revenue to ease the pain. But this does seem to be, at least on an intuitive basis, slightly counterproductive. What it could mean is that we've seen a pause in equities over the past couple of months, and this could continue until June economic data is revealed to show the impact of the April consumption tax hike. So on the equity side, a bit of a holding pattern there under the 50-day moving average. And if we go to the situation with dollar yen, you'll see a similar situation in terms of the price action here. Rising trend channel from October, based around the 101.80, 102 yen level. If anything, this is a more positive chart than the Nikkei. We do have the block of the 50-day moving average just above at 102.46. RSI is at 50, so slightly stronger than the equities as well. So if you regard the currency on the upside as being, or the dollar yen on the upside as being a leading indicator on Japanese equities, then we do have sort of a sign that things are looking more positive, or will look more positive, for the Nikkei over coming weeks. The other thing to note here, as far as dollar yen is concerned, is the the three main support points above the 200-day moving average at 100.57. That should be a flag, or at least an indication that we will see a push to the upside. As you can see, the top of the channel from October is at 108, and so the implication is that a break of 102.50 or so should be enough on this occasion to take us up towards the 108 level, perhaps on a 2 to 3 month time frame, something which would be just in time for the June economic data to come through. So that's so the reasonably bullish outlook in terms of dollar yen, and hopefully feeding through towards the Nikkei, where as you could see, we've got reasonably positive consolidation. That's it from me. See you again next time.